Hello everyone, and thank you for tuning in to What You Should Know for the week of May 23rd. My name is Mike Lanise and I am your portfolio manager at Fluent Financial. This past week, the S&P and NASDAQ both were lower for a seventh straight weekly decline, the longest since 2001 and 2011 respectively. The Dow Jones was also down for its eighth straight week. That's the longest weekly decline since 1923. As recession fears sent U.S. equities reeling despite a late Friday morning rally. The NASDAQ Composite Index plunged over 4%, while the Dow and S&P both lost around 3%, and the Russell 2000 slid 1%. 8 of the 11 S&P 500 sectors were negative, with consumer staples and discretionary plummeting over 8% after a slew of concerns on the retail reports. So let's talk about what happened on Wednesday. We had a 4% market decline on the 18th of May, and that was because the earnings of Target came in below estimates. But it was more than that. If you look on the chart, you see Walmart announced on Tuesday, and that spooked some Target investors. And then on Wednesday, Target announced pre-market, and it really took a hit. I think it was trading down over 25% pre-market. So what actually happened was that Target said that its consumer spending were getting away from discretionary spending and moving more towards their staple spending. So they can get away from purchasing larger cap items in favor of your have-to-have soap and toilet paper type items. So April spending rose 0.9% month over month, but the optimism in that initial jump in the markets was hit by these Walmart and Target inflation profits, signaling that consumer spending behavior may be changing, and that caused that downward spiral. Treasury yields edged lower as financial conditions continued to tighten, and credit spreads widened, with the U.S. Treasury yield dropping to about 2.84% off of the recent 3.16% highs. In housing news this past week, higher mortgage rates kept residential starts under wraps, while existing home sales fell to the slowest pace since the pandemic started, and home builder sentiment dropped to a 2-year low, with the NAHB index hitting 69. U.S. industrial production rose for a third straight month in April, with capacity utilization reaching a 15-year high. But Fed surveys from both New York and Philadelphia regions revealed deteriorating business conditions, as seen by both the Empire and Philly indices above. China reversed course by purchasing cheap oil from Russia after initially cutting back on these purchases. Crude oil gained 0.5% on the week. If we look year to date, we see the Dow Jones down over 14.5%. The S&P 500 down almost 19%, the Russell 2000 down around 22%, and the NASDAQ down over 28%. Looking to the week ahead, we've seen the narrative quickly shift from stagflation to potential recession, which would be 2 negative GDP quarters in a row. Last week's data clearly demonstrated the extent to which inflation is affecting the U.S. economy and the resilience of corporate profits, the latter which is expected to support the market, but we saw with the Target and Walmart earnings that may not be happening. This week on the economic calendar, we see additional evidence of fiscal anxieties, beginning with the May U.S. global flash PMIs on Tuesday. Forecasts for slight monthly decreases in the manufacturing and service sectors may prove to be overly optimistic. On Wednesday, we get the minutes from the recent Fed meeting, and that will merit some attention, but may have a muted impact, as a 0.5% rate increase is already being priced in for the June Fed meeting. The second estimate of the U.S. Q1 GDP numbers will come in on Thursday. If you recall, we initially saw estimates of a positive 1.1% GDP, and that actually came in at a negative 1.4%. The revisions are expected to be a negative 1.3%, so slightly better than initially anticipated. Other U.S. events include new and pending home sales both Tuesday and Thursday, durable goods orders on Wednesday, personal income spending on Friday. Feel free to leave comments and questions to this post. Click the like button if you feel that it was informative. Subscribe to our YouTube channel and visit our fluentfinancial.com website for further information. As always, thank you for tuning in to What You Should Know, and have a great week.